January 21st, 2026. Let's see how many times our strategy came into effect today. We had a very exciting day. First of all, let's talk about the daily momentum. So, where we are right now at this current point in time, we have our daily momentum is to the downside. So, we have that slight bias. We had a huge sell off yesterday, which was Tuesday, the 20th. And then today, as you can see from this volume bar here, the volume increased it was an insane movement that happened today at a specific time, and it was probably due to news catalysts, and we're going to get into that. But all that matters, technically speaking, is that the volume increased today, and our momentum is reaching a turning point. It looks like there was a lot of buyers stepping in today. A lot of buying algorithms got initiated and turned on today, and we're going to see exactly when that took place. And we start with a market open right here. We want the 5-minute twins, the extended hours and the regular hours. We want the 5-minute twins to be in harmony before we can take a trade. What do I mean by harmony? The momentum of this 5-minute extended hours MACD needs to be in sync with the 5-minute regular hours, the 5-minute twins, 5-minute regular hours, 5-minute extended hours. Do you see? This is already going up at market open, but this is not. We're going down. So we wait until the histogram starts to align. Not yet, not yet. Now this is popping up. This is already holding that upward momentum like we just said. So this is where opportunities come from. If you wanted to play just MACD energy, you could literally enter the position just from the MACD energy alone. You don't even need to look at the price. That's a whole different thing that I'll get into later in a different episode. But for this strategy, we want a volume confluence on the right side of the 2-minute momentum while this is happening, while we have harmony between these 5-minute twins. Look what happens right here. We have a volume confluence, a volume bar greater than the previous three. We're on the right side of the momentum on the 2-minute chart. So we enter the position here. And we did enter at this yellow line. We took a lot of profit. We took our initial profit at about a 2-to-1 ratio. So here was our entry. Our stop loss is right here, slightly below the entry point. Its first take profit is this first line, which is essentially a 2-to-1. And we let runners run to continue getting more and more profit. And that was a win. Now, right here, this starts to flip over. This starts to flip over. So now we have downward permission. We have a volume confluence on the right side of the momentum. Why didn't I take this trade? Because I was scared. And that's all right. And that's good to admit to yourself. Look at how beautiful this trade would have been. Same situation, same strategy. So the strategy has come into effect 2 times already, 2 wins. Now we are not taking any more trades to the downside because now this is not aligned anymore. This was the move that just happened that we would have won, that the strategy won. But now the histogram is not aligned with the direction. So there's no way to take a trade yet. We want there to be harmony between the histogram momentum and the region that it's in. Now, after a certain point, after about the first 2 hours, you actually don't need both of the 5-minute data up. They start to fall in sync. After the first hour or 2 hours, they become in sync. So there's no need to look at both of them at the same time. You can just use the 5-minute regular hours at this point because they're both in sync. So it's always good to look at this one for extra context sometimes, but not always. You don't really need to. What do we see? We have to wait until this crosses over and expands into the green to have permission to take long trades. Or if we're going to take short trades, this needs to be expanding into the red. So that almost happens here, but not quite because it's not that much of a variance. It doesn't even defeat the most previous histogram bar. So we're waiting for the momentum to continue to the upside, which it eventually starts doing right here. So at this point, anytime you see a volume confluence, that strategy that I use would come into effect. Like this is technically a trade to the upside right here. This candle right here. Your entry would be at the close of the candle, stop loss slightly below that candle. Why? Why do we enter? We're on the right side of the 2-minute momentum. We have a volume confluence. That's the entry. Look what happens. We get all of our targets. This was a great win right here. That, the strategy comes into effect many times. And a lot of times it's got a high win rate. The win rate is normally around 70 to 80%. But look at this candle. Look what happens right here. At this time today, something happened. I haven't learned what it was yet. Maybe it was news or whatever. But the volume went from nothing to this. Okay, here's our volume. Okay, we're going along, and then look what happens. We go from nothing to more than something. This is a huge algorithmic. This is hedge funds and banks turning on software that's initiating buy algorithms. That's what that is. Every stock, not just the NASDAQ, the SPY, and every stock that's associated with the SPY, or even mildly associated, they all had upticks. They all started running. Why would that happen? The whole market was experiencing an anomaly, a rare event in which a lot of buy-in programs initiated and got turned on. And I caught this trade. I didn't mark it yet, and I did catch this trade, and we're going to go into why I caught it, why I acted on it. And the reason is this. When this candle was igniting, I knew that it was an anomaly because the volume was so drastically higher, and there was still like a minute left on this 2-minute candle, and the volume was already like up here. It was an anomaly, and I knew that this is likely an event. This is likely something big that's going on, and I just didn't know what the cause of it was. It happened to be aligned with my strategy. Why? The 5-minute MACD was already in the green. It was starting to taper and build a momentum back to the upside. Right here, this previous one before the event occurred. So when this event started occurring, the path was already set in motion for me to take the trade. So I took the trade here, right here. I locked it in before this close, about this level here. Stop loss slightly below the candle. That first target was hit, which is essentially a 2-to-1. And then I locked in profits right here on this dashed white line. So it was a good day. It was a good day in the market. My strategy came into effect many times, roughly 5 or 6 times, all of which were wins. And let's go over this last setup. Look here. We get a crossover to the downside on the red, right? Now we're almost crossing over to the red. So we're looking for a volume confluence on the right side of the V. Well, we just had one here. This is a volume confluence on the right side of the V. But we haven't crossed over yet. So it's a risky setup. We want to wait most of the time for a crossover to occur. The crossover occurs right here. Now we're in the red. What happens the very next candle? We get a volume confluence greater than the previous 3. So, how you set your stop loss determines if this was a win or a loss. Generally, this would have been a loss. So, you could say from our data and back testing for today, January 21st, the strategy came into effect around 6 times, one of which was a loss, happened at the end, and all of the rest were wins. With that being said, I hope you have a good one. Take care.